Our next bank is African Bank. It is the largest unsecured lender in South Africa, with loan advances in the region of 50 billion rand and a market cap of 26 billion rand. In 2009, African Bank acquired Ellerines, that's a furniture retailer, and has been digesting it ever since. The bank has a price-to-earnings ratio of 9, a dividend yield of 6%. Looks good, and their pref share is the share code ABLP. I'm saying it looks good. From my front, I think Abel has been a good player, good returns.
Yes, I love
already judged
the African Bank. Yeah, not everybody does.
I already judged that. I think Eugene likes it. But
yes,
anyway,
okay,
let's begin with you.
The ordinary shares have been rather stagnant.
Yeah.
And it's because African Bank is perceived to be in a sort of risk zone because globally people are worried that unsecured lending has been too aggressive in South Africa. Okay. The loan advances have grown mostly from bigging larger loans to existing clients. Okay. The issue of the pref shares is only one of the ways in which African Bank raises capital. Right. They have a massive corporate debt program where they issue bonds on the bond exchange. Okay. This is a narrow portion, but they have been quite active in this space because they've been hungry for money. Why? Because their loan advances have been growing to 50 billion rand. Was it also because their shareholders don't want pump money into the business? Well, you know, their shareholders are quite loyal, and the local institutional market is very receptive to African Bank paper. But I think talking to the treasurer of African Bank, Gavin Jones, who's a personal friend of mine, he said the South Africans are now full of the stuff. They had to go elsewhere. Yeah. So they're looking at corporate issuances in Europe and America and all that sort of thing. Yeah. But as far as this is concerned, this is the trend that Eugene is talking about. The value at which these things trade in nominal price has gone down, which has meant that the effective yield they offer has risen there. He's talking about 8%. Yeah. So if you're prepared to face down all this uncertainty about unsecured lending, blah, 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 then you could be getting an 8.6% return, which is much, much better than cash. Yeah. Accepting that you only get your money once every 6 months and you have to live with the idea that there could come a day where African Bank is having some kind of problem. Exactly. In which case they may skip their dividend on the pref share and only pay it to you when they start making profits. Yeah, I was going to say as long as they stay afloat. But let's go to Eugene. Eugene, I tended to get the sense that this is one that you like because you're looking at the raw numbers here in terms of return.
Yeah, I agree with Paul, and I think this is a good case study for preference shares, for corporate bonds and alike. You've got to look at this company and say, what is the true risk in this company? Now, personally, I think Able is a fantastic business. Like many other banks, they did make mistakes, and I think Ellerines is a specific one.
Ellerines was a mistake.
It's a mistake that has been, I think, sorted out to a great extent. I think there's a lot of negative talk on the unsecured lending side, but these guys know how to manage their book. They're very, very good at that. And if we look at the Able preference share, the market in general sold off a little bit during May, June, July. There was a big Brait issue, and the guys liquidated some of the existing holdings to buy that. Yeah. But Able sold off even more, and I think it sold off on the back of exactly what Paul spoke about. People are fearful about potential non-payment of dividend. Now, I think this is highly unlikely. Able is highly cash generative. We know that they need capital. Yeah. So we acknowledge that there's most probably going to be more pref issues. But what Able did very well over the past year or so is they diversified their funding methodology and their funding methods. And it's also what Paul mentioned, is they tapped the international markets, and they did it extremely successfully. Okay, we're running out of time, Eugene. We're running out of time. So for you, Able, hot or not? It's very hot. At 8.6% for pref share, I like it.
And you're sure about the future?
Yes, look, I love the ordinary shares, but I'd far rather buy the ordinary shares than the pref share. As far as pref shares are concerned, I'm still happy to go with the ones I spoke of earlier, so I'm going to say, regrettably, not hot on this one.